Tesla closed at 345.73 today, up 0.7%. A quiet day on the surface. But underneath, the flow data just flipped in a way we haven't seen all week. Let's break down what changed. Here's the week so far. Monday, the stock dropped 2.5% on broad weakness. Tuesday, FSD 14.3 dropped near the close. Dealers had to hedge the news overnight, and that's the setup for what happened next. Wednesday, many names squeezed, but not Tesla. The stock gapped up to 364 at the open on the FSD headlines and ARK buying, but the dealer hedging absorbed all the buying pressure. No gamma squeeze, instead a $20 round trip, 364 to 343. Today, another test of 337, and it held again. That's a double bottom. Volume declined every single day this week, 1.3 million to 728,000. Sellers are running out of stock to sell. This is the story of the day. Look at the flip from yesterday to today across every signal layer. Yesterday, dealer flow bearish negative 578,000, dark pool 39% buy. Options flow dominated by sellers. Today, dealer flow flipped bullish positive 124,000, a 700,000 contract swing in one session. Dark pool jumped to 73% buy with all top prints clustered at 345.62. Institutions were accumulating at this exact price. The unified score still reads 3 out of 10 bearish, but that's a lagging indicator based on moving averages. When leading indicators like flow and dark pool disagree with the lagging score, the flow wins on a 1 to 5 day horizon. $178 million in dark pool notional today, 73% on the buy side. Signal reads accumulation. The largest print was 19.5 million at 345.62, a buy. The second largest was 17.4 million at the same price, lean sell. Institutions are building positions and hedging them at the same level. That's conviction, not noise. Look at the 5-day trend. April 2nd, 97% buy. That was the delivery miss dip buying. Then it faded. 54, 63, 39 on yesterday's sell-off. Today, back to 73. The smart money bought the dip twice this week. Dealer flow closed bullish at positive 124,000. Calls closed at positive 297,000. Dealers are long calls, which means the market is positioned for upside. Puts closed at negative 173,000. 11 sentiment inflection points today. The tape was choppy but resolved bullish into the close. The velocity in the last 30 minutes was positive 14,000. Buyers stepped in at the bell. Zooming out to the 21-day trend, 13 bullish sessions versus 8 bearish. Despite the price being down 15% from March highs, dealers have been net long for most of the past month. That's structural positioning, not day trading. 8.9 million in total premium today. The standout, a $3.5 million leap call at the 300 strike, expiring January 2027. That's a deep in the money, long dated conviction buy. Someone is betting Tesla is significantly higher in 9 months. On the put side, heavy bullish put selling at 345 and 350 for tomorrow's expiry. Premium collectors positioning for the stock to hold this level through Friday. Gamma exposure is negative 18.7 million. That's a negative gamma regime. Dealer hedging amplifies moves in both directions. Call wall sits at 400, put wall at 350. Tesla closed just below the put wall at 345. If it clears 350, dealers have to buy. If it breaks 337, dealers accelerate the selling. This is a coiled spring. Here are the battle lines. 337 is the double bottom support, tested twice, held both times. 350 is the put wall, immediate resistance. 360 is the gap fill from Wednesday's failed breakout. 400 is the call wall ceiling, and 280 is the gamma flip point. Below that, moves accelerate down. The stock is sitting right between support and resistance. Something has to give. One piece of fundamental news worth covering. Reuters reported today that Tesla is developing a new smaller, cheaper compact SUV. Priced below $30,000. 4 sources confirmed it. It's a new vehicle, not a Model 3 or Y variant. Production in China first, then US and Europe. Here's our read. This is a defensive move, not an offensive one. Tesla killed the $25,000 car 2 years ago. Now they're bringing it back because BYD Siegel is at $10,000 in China and 50,000 unsold Teslas are sitting on lots. It's good for Tesla, the car company. They need volume. But it's mixed for the AI narrative. A $30,000 buyer isn't paying $99 a month for FSD, and these cars will ship with AI-4 chips that can't run the V15 10X model, more data collection cars, fewer robo-taxi candidates. Putting it all together, flow data says cautiously bullish for the next 1 to 3 sessions, Dark pool accumulation plus dealer flow bullish flip at a double bottom is a historically reliable short-term signal, but the upside is likely capped at 350 to 360. That's the put wall and the gap fill from Wednesday's rejection. This is not a breakout setup. This is a 337 to 360 chop zone until April 22nd earnings. Everything between now and then is positioning. The real question, does the earnings call give institutions a reason to hold above 360? All of this intelligence, dark pool, dealer flow, gamma exposure, institutional flow, is available at TradeAlerts AI 777.com, $39.99 a month. Tesla and the Mag 7 are free with sign up. Follow at Ntonic Stock Pick on X, TradeAlerts AI on YouTube, and TradeAlerts AI 777 on TikTok.